Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is November 28th, 2017. Finally over my cold, so I'm feeling good, and there's been a lot of activity in the markets. The one that we're going to look at tonight is natural gas. We've got the ETF being UNG, and you can see that the short, intermediate, and long-term trends are all pointed to the downside, and the technical rating is also pointed to the downside. But we had a trigger here, a slow low that occurred in our elastic level, and we actually had a signal that occurred yesterday as well, and you'll see here when we take a look at the chart that it has begun to bottom out here. So we'll take a look at a daily chart, this daily chart for natural gas. You can see with the volatility to the downside over the last, well, going into Thanksgiving, and then we've had some really sharp surges with today natural gas being up, let's see what it is. Almost 4%, 3.78% here, with natural gas having had a really nice move here. Now, it is right now above this key support level, and so it's gonna, or it was resistance, now it's support because it's above it, and we're now running up against the in this case the 50-day moving average. So I think it's gotten a little too far ahead of itself, but as you can see with the signal that we had here in the elastic level, this second blue dot here is the slow low, and then we had a trigger that occurred the other day. And then I want to also show you this value chart indicator. You can see that as of the 24th, it might be hard to see on the screen, but there's a little bit of red. That means that the market has gone to an extreme. So I'll be talking more and more about value charts. This was incorporated into the book that I co-wrote a while ago, quite a few years ago now. But in the book Dynamic Trading Indicators, and this is what the value chart indicator looks like. So this surge that we had to the downside, and now we've had a bounce back up. So for all intents and purposes, we are looking at a market that has increased volatility and is beginning to show some signs of life. Now that it's back above this support level, let's see how it actually plays out. Tonight's deep dive is not really a call to action, to enter or exit a particular position. It's more of a call to action to say you should start watching this market because good things could be happening. I think it's still going to be in a trading range as we take a look at things, but I want to point out that our energy level is now in what we'll consider to be a high level of energy. The energy level is actually quite high. If we take a look at the energy level dated as of yesterday, you see natural gas was at the top of the list for all of the different markets. The only two that are really showing any signs here are going to be natural gas and the Hang Seng, and then we have no markets that are actually in a consolidation period. So with that, the fact that we've got a high energy level, and I just want to show the market tendencies that when we're in an expansive phase, that natural gas is at the top of the list where this occurs on a frequent basis. If we look at the last, I think it's 10 years worth of data, thereabouts, it spends 4.8% of its time in an expansive phase. No doubt that natural gas is a volatile market and offers up some really good opportunities. If we look at the seasonal tendencies, you can see this chop, these big surges up and down, and right now we're at a peak, and we should expect some type of retracement. Not a surprise given the strong surge that we actually had here today, but I do expect maybe not necessarily a massive sell-off per se, because we do have that support that we're at. But if we break that support that I was alluding to, then we could see a more of a consolidation, but a volatile consolidation. And with that, we always have opportunities because volatility begets opportunity, which begets obviously the opportunity to make a lot of money. So that's kind of where we stand right now. Let's see if I can pull up. I think our systems are actually flat the market. So you just come to signals. We come down to market signals, and we'll take a look at natural gas. I'm looking at another screen here, and they're definitely flat the market at the present time. But I do expect an opportunity to start to get some of these things either plus or minus, long or short, to allow us the opportunity to actually get in and start taking advantage, because this is actually a really good market to trade, whether you do it on the future side or if you do it on the ETF side. So again, if you are looking at the ETF, you'd want to be looking at the UNG. And I know that because the trends are all negative and the technicals are still negative, which are slow to react to things, the slow low that we're seeing in the elastic level, and I'll just point this out again here with the value chart just a couple of days ago, having dipped into the red zone, which means that the market was severely oversold. And the snapback that we're seeing, I think that we're going to see some consolidation, not consolidation, but we're going to see some extreme volatility here. And any type of consolidation that we are looking at on the seasonal side is going to be very volatile. So it's not going to be for the faint of heart, but it is something that there is certainly opportunity to make some very good money in this particular market. You just have to be nimble. That's why I'm going to have you focus on some of the short-term systems, the intradays, the 45, 60, 90-minute bar systems, and those should hopefully, whether it's popping to the upside and staying above this support level, which is at 3.115 is the support level. So you can see that that's above that mark right now. It's essentially right on it. But if we can hold this, then we'd expect, maybe an opportunity to come up to this this upper level, 3.475, which is what this resistance level is. But I do believe that we're going to see just a lot of increased volatility. So beware. If you're a conservative trader and if you're an aggressive trader, buckle up, because there's going to be some great opportunity here. I'd also watch the 50-day moving average. I mentioned this earlier, that there's still an opportunity to go up and touch that. We'll see how things kind of react, and then it theoretically could meander to the upside, which is what I'd like to see. But the seasonals being complete opposite, we'll see how things sort of play out. Watch the systems. Those are the things that are going to really pull the trigger for us, and that's where the opportunity is going to be had. We'll look at more systems tomorrow, and we'll start to introduce more and more indicators like we have here with the value chart, so you get a better feel for some of the tools that are at our disposal. Thanks very much. We'll talk soon.